What's up, everyone? This is Anthony Pompliano. Most of you know me as Pomp. You're listening to Off the Chain, simply the best podcast in crypto. Let's kick this thing off. Darius Dale is managing director and partner at Hedgeye Risk Management. In this conversation, we discuss the macroeconomy, monetary policy, the role of the Federal Reserve, China's economic development, Bitcoin's future potential, and the importance of financial literacy in today's world. I really enjoyed this conversation, and I hope you do. Each other for a while. He may be the only person I know who I'm willing to drink with, talk macroeconomics, and then go on a football field and beat him. But that's a special place in my life. Thanks for coming to do this.
Yo, it's a pleasure, man.
You even have the swag on.
Absolutely, man. I'm a Hedgeye.
He's got the Hedgeye swag.
Absolutely.
All right, let's go through your background first, and then we'll get into macroeconomic stuff. You grew up where? Seattle?
Yeah, so I was born in kind of a podunk town called East St. Louis. At the time, it was the murder capital of the United States. So kind of had my fun run-in with that old crowd. My family moved to Seattle when I was, I think I was 11 years old. And sort of got involved in sports and whatnot, and that kind of kept me out of those communities.
We got to talk. So you went to Seattle and played football only?
Yeah, played high school football at West Seattle. Shout out to Coach Bergaff, shout out to Coach Rupke.
Listen, man, come on. You can't be shouting out your high school team if they were scrubs.
Come on. Whoa. Well, my senior year, I got a story for you. I don't want to digress. My senior year, we were the first West Seattle high school football team since 1954, I believe, to make the Washington State playoffs. And you want to know the last play of the league city championships they called? On 4th and 6, on 4th and goal from the 6-yard line, they called a dive right to run right behind me. I pick my D end up, drive him in the end zone, fall down, pancake him in the end zone, roll over, and the running back's right next to me with the ball in the end zone. Touchdown.
All right, fair. So you guys won a state championship?
No. We got bounced in the first round. That's neither here nor there, though. That's neither here nor there.
Listen. If you climb the mountain doesn't matter how big the mountain is, right?
Absolutely.
All right, so you ended up going to play football at Yale. Why Yale? I heard that school sucks.
Yeah, it's funny. Another funny story there. So my family, I grew up, very poor, for lack of a better word. We didn't even have the internet in high school. And this is back in the day where you just didn't have any exposure out, when you don't have the internet. And certainly I don't think a lot of people in the younger generation can empathize with that now, but information was not ubiquitous back then. I was getting recruited to play football, for some Pac-12 schools, the biggest probably being University of Washington, which is our hometown school. So I was pretty set on going to University of Washington. In fact, it was the only school I had applied to at the time and playing football there. But my high school coach, knowing the student athlete that I was, sent my VHS, and this is tape for you younger viewers. It's a black rectangle that you stick into a VCR.
You used to have to make them yourself.
Yeah,
there was no website that this kid blew up.
You used to have to stick these things in and record football games with these giant boxes. Anyway, so he sent my tape to the coaches at Yale, and they started recruiting me. When they first got there, when I first met Coach Reno, who's now the head coach at Yale, he flew to Seattle to visit me. When he left my school, I literally, my friend asked me, "Oh, who's that from?" Because they were used to seeing coaches come in and recruit me. I go, "I don't know, some small school in Connecticut." I had no idea. I'd never heard of Yale. I had no idea what the significance of going to Yale was. I heard of Harvard and Princeton from the movies, but I had no idea Yale was part of that sort of elite institution base. So fast forward into my second semester senior year, I'm still set on going to UW. I'm still getting hounded by coaches at Yale. Craig McGowan, who's my AP marine biology teacher at the time in high school, he was also the head of marine biology at the University of Washington, where I was sort of dead set on going to school. He pulled me aside after our final, heading into second semester, and goes, "If you don't I don't know what to tell you," basically is what he's saying, but I can make sure you don't go to University of Washington. You should go to Yale, but if you're too dumb to figure that out, I'll make sure you don't go to University of Washington. And that's when everything clicked. So that was for the first time I got on a plane.
So the first time you ever got on a plane?
Yeah, was to go on my visit to Yale.
Really?
Yeah.
So you said AP classes. You want to hear a great one? When I got to college, a kid was showing me a schedule, and we were freshmen, and I was like, "Hey man, how come you ain't got a math class?" And I thought, like, idiot, you didn't schedule one. And he was like, "Oh, I don't have to take any." And I was like, "What do you mean?" He was like, "Oh, I took them in high school." I was like, "What?" And he was like, "Yeah, AP classes." And I was like, "Oh, my high school didn't have that."
Yeah.
and he's like, "Nah, I'm sure that they did. You're just an idiot." Totally. And I was like, "Nah, we didn't have that. Like, I would know."
Yeah.
And so he's like, well, you should like maybe ask somebody. So I called the smartest person I knew, and I was like, hey, did we have AP classes? They were like, yeah, I took all of them. You were in none of them.
Let me guess, is our buddy Jamie?
No, I wasn't Jamie either.
Shout out to Jamie.
We got a mutual friend who I went to high school with, but no. And I remember thinking like, oh wow, man, like you could have taken classes in high school that counted towards college, like.
Yeah.
And I was busy playing sports and all that stuff. I was like, damn.
Look at you now.
Yeah. Well, here's what's funny. So you went to Yale, I went to Bucknell, and we would go play. I think we only played at Yale 1 year, and then we go play Harvard and Princeton, all these places. And Yale always cracked me up because they cared. Like at these other schools, like the students would come, they would leave, whatever. But at Yale, like the fans cared.
Totally, man. We had a good fan base. We were pretty good when we were there. And I think that sort of fosters the community around Yale. And also New Haven is a great town. You know, New Haven's got a rich tradition around that Yale football program. You know, maybe not less so today with the, the advent of this, internet and TV and all these big TV deals for college football. But back in the day when it was just your hometown team, Yale was big time, in the 60s, 70s, and into the 80s.
What's your biggest takeaway from being a student at Yale?
Oh, man, my biggest takeaway from being a student at Yale, I don't even know if it's my takeaway. It's something I would go back and do had I known. I would have challenged myself more academically. Yeah. I wouldn't have been afraid to protect my GPA as much as I was. Because I felt academically inferior coming from a inner city public school. It wasn't the worst school. I did get to go to a better school than I otherwise could have. But it certainly wasn't a good school. It certainly wasn't the quality of schools that
you're playing the game of school, right?
Yeah, I was playing the game of don't look like an idiot around all these really, really smart people.
Yeah. Paul Graham's got a great thing he just wrote where it's you have to learn to unlearn. And it's the whole idea that like most kids when they go through college or high school, they've learned how to hack the test, right? Yes. Meaning that, okay, so you want me to pay attention to all this information and at the end of the course of the semester or whatever, I'm going to take a test.
Yeah.
And I think the example he uses is like, I don't know, medieval history or something, right? He's like, if school actually optimized for learning, what you would do is you would go read the 5 best books on medieval history, right? And then you would walk away and be like, I know the most about medieval history than I possibly could. Like, I should pass this class. But instead what they do is they optimize for that test. And that test is based on the notes and the lectures that teacher gave. And then so if you want to pass the test, you shouldn't go read the 5 best books. Instead, you should read the teacher's notes.
And guess what? In college, it's always like half of the books are written by the professor. That's their day job.
And the tests are all floating around, which he brings up, right? And he's like, the teacher who's been teaching for 15 years can only ask so many questions. So they end up getting recycled by accident or on purpose, whatever. And so you end up optimizing for the test.
Yeah.
And his point is when you leave college, you end up optimizing for a test and you don't even realize it. So when you're building companies, right, how do I fundraise? Well, fundraising isn't the point of building a company.
Absolutely not.
It's just a test, right? How do I get that job? How do I, you start to optimize your life around the same thing school taught you. But if you can unlearn that, there's huge advantages to it.
Oh my God, it's so you hit the nail on the head when it comes to companies and education. Like specifically on companies, your business should be principally focused on solving a problem that your clients face, that your customer base face. That is the literal and single most important variable that determines successful businesses, successful enterprises relative to unsuccessful ventures. To me, that's
What did you do when you left school?
Oh, so I've been I joined Hedgeye. So let's backtrack in terms of how this all played out. So it's 2008. The world's in financial crisis, financial ruin. A lot of my buddies aren't getting offered at their internships on Wall Street. I'd only sort of late. I'd only become a sort of good enough student kind of late in the game to even consider Wall Street, and I actually started to take it seriously. But I kind of missed that whole sort of Goldman Sachs internship whole ordeal. So
for those that aren't aware, the Wall Street get an internship, participate in the summer.
That starts heading into your junior year of college at the latest.
Go to Brother Jimmy's on the weekend, right?
Or sidebar.
Yeah, whatever the new hottest intern bar is. But it's pretty competitive.
It's very competitive, and that starts. A lot of these kids have been being groomed for life for these kind of opportunities. I wasn't even aware that the opportunities existed. Yeah. But once I became aware, they became very interesting to me. However, I was, sort of just kind of late to the curve. So, kind of kicking the tires, trying to look for an off-beaten path to get into the financial services industry. I actually saw an ad in the YDN, the Yale Daily News, that says we're hiring. It's a full-page ad. I mean, I've never really seen an ad in the YDN. And it was by Hedgeye CEO Keith McCullough at the time. This is back in 2008. It says we're hiring because no one else was hiring on Wall Street. And you know, Hedgeye, he also went to Yale. He's a Yale hockey captain in '99, and he said, look, I'm going to start a company. I think he was 33 or 34 at the time. I want to start a company. I have a vision for where research is going to go. Independent investment research is going to go. I have a vision for the mediums in which finance is going to, you know, sort of change in terms of the communication mechanisms and delivery mechanisms of information. I think that's going to change, and I need a bunch of young analysts that I really can afford at Wall Street rates to come work for me. And so I was part of that first cattle class of analysts, you know, kind of, I guess, the longest surviving one.
Yeah.
Others have gone off to business school, done some really great things around the world. But,
you
know, I certainly sort of.
What'd you guys do when you first got there? Like, what was his pitch to you?
Well, its pitch to us was, I'm employing you. This is 2008, 2009. So that was the first pitch. But secondarily, it was an opportunity to work at a startup. Like, you know, it was an opportunity. I'm a partner now. I'm, you know, the co-head of the macro team with Keith. And you know, I've been at Hedgeye for 10.5 years now, and the opportunity to build something was the pitch. You know, it wasn't going to be lavish. I mean, I remember plenty of days where the heat in our office weren't working. We were right on the Elks campus, so I kind of lived in New Haven for 7 years or 3 years after college, before I moved to New York. You know, it wasn't glamorous, but it was awesome because you could just see the wheels starting to turn as our collective knowledge base grew, our client base grew, and our feedback loop grew. All those things kind of grew exponentially over the years.
Yeah. And so talk a little bit about what you guys actually do, and then we'll get into the macroeconomics and what you guys are seeing this year. Yeah,
so Hedgeye at its core is a sort of distillery of industrial grade investment research. You know, kind of the whole genesis behind the name Hedgeye is sort of, you know, it's what you would see if you looked into if a high class hedge fund had transparency around their investment decision making processes. So Keith was former buy-sider, had a prolific career on the buy side, you know, some very big shops and some very big positions. Had a really successful career and really during his non-compete when Carlyle Blue Waves venture blew up, he basically said, I wanted to recreate my team. I want to recreate my process, but blogging is just as easy as managing money, if not more. There's no competition in the investment research sphere. I mean, you talk about the people he's competing with, you know, on TV, and it's not much better, you know, on the sell side, you know, in terms of the traditional banks and brokers, you know, if only because of their conflicts of interest. So, you know, what we're trying to do is effectively show world-class process in terms of investment decision-making, and then share that process with, you know, institutional investors, hedge funds, mutual funds, pension funds, and then we touch sort of investment advisors. We touch retail investors. You know, there's a product set and a product solution for each of these people, and a price for each of these people, and it works, and it's a great business.
And so as you guys do that, like, talk to me about what is the deliverable? Is it hey, we've done work on this asset class in this country. Here's how we view it. We're thinking that long over the next 6 months is a good idea. Here's the product to actually get that exposure. And like, here's the ideas. Is it vehicles that they can invest in? Like how do you actually interact with the clients?
Yeah, so it's mostly through sort of the various mediums. I think one of the Keith's great visions, and I think I'm actually shocked that no one has tried to compete in this arena that he's sort of kind of built, is the fact that we create, you know, marketable, consumable content. You know, traditional, no matter how good the research is on the in Wall Street, it's delivered in a very boring, very traditional sense. Here's a PowerPoint presentation. Here's a research note. We're going to do a conference call. We said, to hell with all that. We still do all those things because that's kind of the lowest
expectation.
Sort of, that's the expectation. That's kind of lowest common denominator of communicating. But what's beautiful about Hedgeye is, you know, not only do we have world-class analysts and world-class research that is as good or if not better than most, you know, and I don't mince words about that. It's the fact that we created and presented in a consumable format. So we have a video team. We have a very expensive live full studio in our office. Yeah. You know, we can produce video content, you know, consumable video content that's, you know, on par with anything you're going to see on CNBC and Bloomberg. And so when you sort of marry the fact that we have great analysts, great investors, you know, with repeatable, transparent processes and accountability, I think that's another thing that's unique to Hedgeye is the fact that we're accountable to all of our calls. You know, a lot of investors, a lot of people who kind of do what we do, or at least on the side of finance, you know, they'll pop up when something's going well for them and they'll go away when it's not going well for them. We're in our clients' inboxes every day. We're producing video content every day. I'm on Twitter every day. You and I interact on Twitter. It is about, you know, just being there for the client. If the client may be a portfolio manager at a very, you know, $1 trillion asset manager, in which you have a couple of those. If the client's a guy managing $30,000 in his PA, you know, we have a lot of those as well.
Yeah. Let's go around the world a little bit in terms of different asset classes and what's going on. Let's start here at home in the U.S. What did you guys see in 2019, kind of from a macro viewpoint?
Yeah, so I mean, 2019 has been a really interesting year. It's probably the most
chaos.
It's probably the most interesting, chaotic year of my career in terms of all of the different sort of kind of macro things that happened relative to sort of some of the expected outcomes. And I namely use the sort of year-to-date return. In fact, I'm not even sure what the year-to-date return is. To me, and just to us in general, investing is not about year-to-date. Year-to-date is a compensation scheme. That's how hedge fund investors get paid. That's how the people on Wall Street get paid. It's not about year-to-date. It's about when did you make this decision and how well did the decision do in terms of performance. And so to me, the biggest call of 2019 was duration. Duration, for your viewers that don't know, it's sort of the sensitivity to interest rates. So we had a view that interest rates would fall. This is going back heading into Q4 of 2018. If you recall, for those who are in finance, you couldn't have a conversation in finance if that wasn't prefaced with, okay, so rates are going to 4 to 6% on the 10-year. What do you do from there? We stopped that conversation dead in its tracks and say, okay, the economy is about to inflect in rate of change terms. Inflation's about to inflect in rate of change terms. And it's very likely that bond yields get cut in half from here. That was a great call. But all the things associated with that making that call were also great calls, like being long housing, being long gold, being long the dollar. Dollar tends to go up when financial conditions are tightening, things of that nature. So that was a good year for us in that regard. I wouldn't, it's probably a mixed year in terms of calling stocks because, I think, we definitely got the sector and style factor exposures right, but I don't know that we were sort of as exposed to sort of the quote-unquote year-to-date return if we could have been. But we certainly weren't exposed on the downside in Q4 of last year. We actually made the call that the market would crack and be led to the downside by more cyclical sectors and style factors then.
Got it. And so how do you think about, let's just call it all of the Federal Reserve and the geopolitical / just political stuff going on in terms of like the instability or the uncertainty, right? So I'm worried. You've got a president that is raging multiple trade wars, right? Yep. Or at least threatening multiple ones and engaging in some of them. You've got a Federal Reserve that has chosen to cut rates, right? It looks like QE
forced to cut rates.
Okay, so explain more.
Well, the forced to cut rates. So the Federal Reserve tends not to do what the bond market's suggesting. So you go back into what kind of catalyzed the rate cut and heading into the first rate cut in July. It was a summertime swoon in May. It was a degradation of economic data. And it was the rise in credit spreads that we saw in the second quarter of this year. The Federal Reserve, Jay Powell, don't forget, is worth $100 million. He's worth Carlyle. He's a private equity guy. His singular first and foremost job as Federal Reserve Chairman is to make sure the credit cycle continues to work. And I actually think he's doing a fairly good job of it. I think he sort of certainly elongated the business cycle with their actions they took this year in terms of monetary easing. But that doesn't mean the business cycle goes away.
So somebody once said to me, people think that the Federal Reserve job is to manage a currency, and what they forget is their job is to manage an economy.
Their job is to manage liquidity. We can talk about this for 2 hours.
Explain that more.
Absolutely. The one I had a very, very important, to say the least, bond investor teach me this a few years ago. This is probably sort of 2016. And he said the most important driver of economic activity, of inflation, of investor expectations is liquidity. It's the supply and demand balance or imbalance between maturing debt obligations and the cash to invest in new ones. Or so the cash from the maturing ones and the supply or the lack thereof supply of new demand for credit. And so as long as the Federal Reserve can have a policy setting that facilitates that in a really sort of productive manner, that's actually quite good for the economy. That's the virtuous cycle that we tend to see, when the economy's doing well and stocks and credit are doing really well. When that breaks, and it's hard to, a lot of these are private debt instruments. It's hard to understand when that could potentially break. And a lot of times that breaks just as a function of investor confidence. Investors, if they think interest rates are headed lower, they're more likely to hoard cash. They're more likely to sort of be in defensive assets, and it's less likely to sort of extend credit. And so the sort of credit chain, and we can talk about repo as well, because I think this is what's happening in the repo market as well. I think that whole process gets sort of, there's a wrench gets thrown in that process when the economy slows, because people start to get nervous at the margins.
Repo. Oh
man, this is my favorite topic right now. To me, let's take a step back from repo and then dive into repo. Repo is only cool to talk about like once every 3, 4, 5, 6, 10 years. They call it the plumbing of the financial system. no one ever talks about the damn financial system it's plumbing. Like where are these pipes going? This is the point of the global economy. The world economy is a dollar credit based economy, for better or for worse. Like we can argue to 6 ways to Sunday if that's a good thing or a bad thing.
It's a inflationary currency that's Federal Reserve with the fractional reserve system. Credit all based.
Those are all secondary considerations beyond the statement. The global economy is based on largely dollar denominated based credit, and most of global trade is not only financed but also settled in U.S. dollars. My theory on that is because we probably have the biggest guns, we exert the most coercive force around the world. That could change, but I'm not making that call. So you take this back to the problem in our repo market. The repo at its core is really just overnight lending. It's people with cash that want to earn a yield and sort of lend on a secured basis to either repo transactions or sort of money market funds. And, money market funds actually funding the repo markets. It's people with cash, and in terms of this, the liquidity in the credit system meets the demand for credit. It's that. So when there's less of that cash coming in for people who need the cash, who need the repo to sort of lever up, I think of like big hedge funds. A lot of these big hedge funds, sort of rely on repo to sort of grow their balance sheet. So they might have a need for leverage to gross up, but they might not necessarily be an incremental supply of cash. And the reason there's no incremental supply of cash is because the U.S. dollar is so strong. The Federal Reserve, and this happens before every recession, the Federal Reserve takes the benchmark interest rate for the world's reserve currency, for the currency that all trade and credit is settled in globally, higher than all the other benchmark interest rates. And that creates a series of a ton of distortions as it relates to the sort of the supply and demand for credit. There's $14 trillion of dollar denominated credit off balance sheet, like not in the U.S., not issued by a U.S. Domiciled sort of borrower. That credit has to be financed in dollars. Like the banks who issue that credit, the hedge funds that issue that credit, the insurance, the pension funds that issue that credit, they have to finance in dollars. So when the dollar goes up, their ability to finance in dollars gets curtailed at the margin. So they have to issue FX swaps, all these things, and that's draining cash out of our repo market. And this happens every time ahead of a recession, because what it's really telling you is that monetary policy settings are too tight for the liquidity. It's creating a supply and demand imbalance at that sort of integral juncture between cash and credit demand.
And so, should people be worried about what's going on in the repo market, or
if it persists? Now, the Fed has thrown I wouldn't even call it the kitchen sink. They've thrown the bus at this issue.
Yeah. They've now, I saw somebody who recently put it in BTC terms. They said 70 million BTC.
Yeah.
It's hundreds of billions of dollars now have been thrown out. Now, It's important to call out, that's not hundreds of billions of dollars of net new capital. That is, some of the capital is being reused night after night after night. Yeah. And so it's, hey, we're going to put, 50 billion, but it's not 50 billion total. It may be some smaller number used, 10 billion 5 times, whatever.
Absolutely. But their balance sheet has grown. I'm sort of quoting this off the top of my head, and I could be wrong, so correct me if I'm wrong on this. I think their balance sheet has grown about $300 billion in the last 4 months. And it's scheduled.
Is it QE?
No, technically no, because I think QE has a different intention. Let's take a step aside. Let's step aside. Do we even have to call it QE? It is what it is. It's the Federal Reserve growing its balance sheet by sort of swapping the reserves for short-term assets that are going to mature. They're likely going to be on a path until the foreseeable future, until the dollar can really start to crack. So you don't have to necessarily call it QE. To me, QE is a different dynamic. The purpose of QE and the reason they targeted longer maturities in the bond market is because they wanted to compress term premiums. They wanted to basically make bond yields as low as they possibly could be to stimulate demand for credit, to stimulate demand for levering up among households.
They're essentially manipulating returns of various assets.
Bingo.
In order to change behavior in the markets.
Yeah, QE is designed to change behavior, whereas this is really just designed to make sure this thing works. And it's there's some technical factors in there that are unnecessary to discuss.
I think the only reason why is it QE, is it not QE becomes a conversation point is because they specifically said it wasn't.
And then again, don't forget, Jay Powell's not a technical, he's not a technocrat. He's not a monetarist or anything like that. So, he's going to get himself in trouble when he starts talking about these really big.
He has an impossible job, I think.
A very impossible job. And quite frankly, I think he's doing a fairly good job of what they set out to accomplish, which is to extend the economic cycle. We're at full employment. we're probably going to remain at full employment for longer than we otherwise would have had they not cut interest rates, had they not also authorized this sort of repo activity.
If they hadn't stepped in, really kind of what Q3 of this year for sure, but even there were some troubling signs, I think Q4 last year, right, all the way up until now. So over the last 12 months or so, there's been various ways that they've stepped in. For those that are not watching and just listening, we've got some Bud Lights here.
Yeah, I'm on my third beer. Pardon me.
Darius told me, he said, is this like a formal thing or is this like a Bud Light thing? And I simply texted back, Bud Light thing.
Both.
Yeah, so if they hadn't stepped in and acted at all, where do you think we would have been? Right, so it's like we know what happened because they stepped in, but is that a full-scale recession? Is that, depression? Is that it would have been bad, but it wouldn't have been that bad? Like where were we headed before they actually stepped in?
So we're definitely headed towards recession, and we're still headed towards recession. I would argue that the Fed has bought itself some time in months and quarters to sort of kind of walk this sort of thing off the plank at a slower pace. But the Fed doesn't control the business cycle, the profit cycle. To me, the profit cycle is what is a dog with the tail that's sometimes being wagged by the Fed. Mm-hmm. But the dog is the business cycle and the profit cycle and the relationship between labor and profits. For 10 years, we've had this very slow, sluggish recovery. And what that's done is allow and a slow, sluggish recovery, and we can go into, I think it's a really big topic we should probably hit on, is sort of the impact of ultra easy monetary policy. To me, I think it's deflationary. And one of the reasons I think it's been deflationary is because you allow for industry consolidations. You allow for established players in every market to get bigger, to buy growth, to quash competitiveness. So this is one of the reasons why the economy has grown slower, because smaller businesses are more dynamic and they grow faster. But it's also one of the reasons why wage pressures have been relatively subdued relative to what traditional economists would have thought based on the Phillips curve. But all those things are still moving in the direction of economic activity, the business cycle maturing. It's just taking much longer than
it's lurching forward.
It's taking much longer because of all these sort of what I would consider to be deflationary, disinflationary sort of policy stimulus. But we're kind of there yet. If you look at sort of, there's a few things. I don't like to talk about charts, in podcast format, but there's a few data points that I think are really important to highlight for your listeners. So obviously we're 50, 60-year lows in unemployment, But there's some cracks underneath the hood in the labor market that are starting to suggest that the deterioration we saw in corporate profits that began in Q3 of this year, in last quarter, is likely to continue. So you got private sector wage growth at 3.7%. That's at a cycle high. You have total non-farm payrolls growth at 1.47%. That's trending towards a cycle low. At the end of every business cycle, those things really start to diverge, i.e. employment growth starts to slow dramatically as wages stay high and sticky. Yep. The unit labor cost inflation is hard to get rid of.
It's the economic equivalent of fat.
Yeah, right. It's fat. Bingo. You actually have to fire people to reduce your unit labor costs at this point in the profit cycle.
Yep.
That's the point.
Yeah. And so as you kind of look at this, one of the things that I think is really interesting is somebody like a Ray Dalio, right? Because I think most people...
I've learned a lot from him, by the way.
Who he's seen as a very kind of traditional guy, right? In the sense of markets and kind of how he views. He's very professional, et cetera. And earlier this year, he wrote a thing that said, look, central banks have two tools. They can cut rates and they can print money, right? And they're unlikely to have the same impact if they do that now as they historically have had, right? So last two recessionary periods, cut rates, I think it's 550 basis points or more. We obviously don't have that much to cut. If they print money, we're kind of addicted a little bit to it. And so we're kind of used to the impact that can have. And so that impact is softening. And his prediction or kind of thought process was, they're going to cut rates, they're going to print money, and eventually we're going to move into a world of modern monetary theory, or this MMT. And I don't think he really took a position on like, is it good or is it bad? But more of like, it just is what it is, right? Yeah. Like we're headed in that direction.
I think we're already there.
Okay, explain.
I mean, don't forget that one of the things that catalyzed the spike in repo rates in the Q3 of this year was the fact that the Treasuries, when the Congress authorized this sort of increase in the debt limit, it allowed the Treasury to start to reissue bills again. They have a very heavy bill issuance calendar for the second half of the year, so it started to drain cash out of the market. The Treasury, the big dog eats first, and this is how finance works. So when the big dogs start draining cash out of the market, repo rates started to spike, and the Fed said, "Oh my God, there's not enough dollars to go around for the Treasury to get fed, for foreign commercial banks to get fed, for foreign hedge funds to get fed, for our own commercial banks to get fed, the ones that aren't flush with reserves, and they tend to be pretty concentrated." So I think what the Fed's doing is effectively acknowledging in so many words that U.S. budget deficits are really big, and they're draining a lot of cash from the system. But what's also draining a lot of cash from the system is that foreign international banks, commercial banks, and all these different players, they also want to extend assets in dollars because dollars have the highest yield. So now they're draining cash from the system via FX. There's all these different things happening in and around the market that are a mere function of the Federal Reserve's monetary policy setting being too tight for the supply and demand balance of liquidity and demand for credit.
China. What's going on there?
Love China. China's in a secular slowdown, man. So China's been slowing for 10 consecutive quarters.
Okay.
One of the most important metric we track in the Chinese economy, which is the nominal growth rate of secondary industries. That's the China dream. That's the urbanization. That's all the stuff that kind of touches that stuff. And it peaked at 14% after the Shanghai Accord. Shanghai Accord was their massive fiscal and monetary stimulus program that we saw in 15 and 16, mostly through 16, and led to the highs we saw in growth, both in China and globally in 17. They peaked in Q1 of 17. They've been slowing ever since. They're effectively from a signaling perspective in terms of their communication, but also from a signaling perspective in terms of their monetary policy settings. They're just managing a slowdown. So like every 6 weeks you'll hear they'll pump maybe 200 billion CNY in open market operations, or they'll lend this medium term loan or whatnot. And this is the way the PBOC manages their liquidity policy settings. But on a trending basis, almost coming out of the market at $100 billion clip a month. Medium term, the balance of their medium term lending facilities, down 20 to 30% year over year. They're basically acknowledging the fact that they can't get the dollars that they need to grow their credit base. So they're just going to allow it to slow until the dollar breaks, until the Fed cracks the dollar with some very aggressive policy. I'm not sure if we're there yet.
What would that be?
I think the Fed has to turn around and say, we're either going to increase the amount, we're going to start to meet the incremental demand. Because right now it's like, oh, here's, I'm licking my finger and putting it in the air. Mimicking Jay Powell, here's $60 billion a month. But is it really 60? I don't think they really know what was really demanded by the market. I think what would be an incrementally dovish step is saying we're going to automatically increase our sort of our supply of bank reserves to take out liquidity from the market, or to supply liquidity to the market rather, commensurate with the step ups in demand. Or they can actually start to move out of the maturity curve and say we're explicitly targeting term premiums. We want to do this whole QE thing again.
How much demand do you think is unmet right now?
I don't know.
What are we talking about size wise?
So I haven't done this analysis myself, so I don't want to put too much stock in it. But I did see a paper floated around the street. Clients push us, email people's research all the time, and they kind of want to get our take on it because we have a very quantitatively oriented investment framework, and we can talk about that some other time. But they want to see how this what some of these sort of key takeaways mean in the context of our quads. I did see a paper that said there's a $1.4 trillion hole relative to the amount of sort of dollar-based liabilities that global commercial banks have to fund their U.S. dollar assets relative to the size of their U.S. dollar assets that are on their balance sheets.
Wow.
So 1.4 trillion is a lot of liquidity, man.
I mean, what? That's
over 100. That's over $100 billion a month if the Fed has to supply that.
Yeah, well, the way I think about what is that? That's 2 times, right? Because I think it was 700 billion was the TARP.
The
bailout.
What the hell? It's a billion amongst friends at this point. We're talking in trillions now, brother. Yeah. Come on now. I mean, yeah. This is why. By the way, this is why Bitcoin exists. Yeah. I don't know that Bitcoin is a tradable good, and we can talk about it, whether it's a commodity, whether it's a currency, whether it's money. I have my views on each.
All right,
of
let's
those
just
things.
go right into Bitcoin. What's your thoughts on it?
Yeah, before we go back into Bitcoin, this whole game that they're trying to keep, and we'll go into Bitcoin, this whole game that they're trying to keep going, this dollar-based credit game, it's clearly broken. Obviously, we wouldn't have had a 08. We wouldn't have had the sort of political unrest that we see globally. We wouldn't have the sort of inequality that we see domestically and globally. Yeah. It's clearly broken.
That's my biggest thing.
They're scrambling to maintain this game.
My biggest thing is the wealth inequality that when we break from the choir. When we break from the gold reserve and we basically go into a system where, okay, I can print money now. What a lot of people don't understand, and actually to me it's an education problem, right? We don't financially educate young people as they grow up and they still don't have the financial education. And I wrote this thing a few weeks ago that said money is too dangerous of an idea for school. Because if people actually understood how money works, right? It's the Henry Ford quote, right? If people understood banks, there'd be a revolution before the morning. Yeah, absolutely. Right? Which is the whole idea of money is that there's inflation. That inflation will ravage your wealth if you leave your wealth in dollars, right? And so people who are quote unquote intelligent or financially literate, they understand this. They get out of dollars. They get into real assets, stocks,
liquid assets,
right? Yeah, all stuff. Well, 50% of Americans don't understand that game or aren't in a position to play that game.
You think it's as high as 50? I think it's way lower than that.
Oh, that don't understand.
No. You think the proportion of Americans that do understand is 50%?
Well, here's where I get 50%.
I think the proportion of Americans that do understand is somewhere around 10 to 20%.
That's probably true. I'm giving people the metric I'm using as to get to 50% is that 50% of Americans can't afford a $400 or $500 emergency bill. So those are people who for sure are living paycheck to paycheck.
Yeah, for sure.
Have no cash, have no assets. It's just paycheck to paycheck. In that world, those people are usually also not. They don't benefit from having a inflation adjusted wage contract.
Yeah,
so
of course.
They're getting paid their $15 an hour or $10 an hour every single year in and year out. They think they're getting paid the same. Obviously not.
Yeah, absolutely.
Because of inflation. But also then they're leaving all of their savings in cash. That cash is just getting
if they have savings.
Exactly.
You can't be balls to the wall long equities if you're making $400 a week and you got to pay the light bill.
Of course. And so I think that's a world where the wealth inequality is so obvious, right? You can look at very explicit charts that show wealth inequality has gotten way worse.
Nothing chaps my ass more, by the way. I grew up very poor, 2 drug addict parents, been evicted probably 7 or 8 times, lived in a van for 2 months.
Yeah.
Well, nothing chaps my ass more than the wealth inequality these people are perpetuating.
So you're already a Bitcoiner, right? Whether you know it or not, because the whole idea, in my opinion, around Bitcoin today, right? There's a lot of people who will say it's a savings technology, right? And what that basically means is today we ask people to be experts at what they do for a living. So, whether you're a research, whether you're a marketer, whether you're a teacher, a fireman, you're just an accountant, whatever you do, you have to go and be good at it so that you can get paid to make a living. Mm-hmm. You make that money. But then we ask you, not only do you have to be good at your job, we also need you to be a good investor. Because we need you to understand when you get out of that cash, if you're smart enough to understand to get out of the cash, do you go into equities? Do you go into gold? Do you go into bonds? Do you go into real estate? Do you go into private markets? Can you go into private markets? What are the laws, right? All this stuff that it takes to invest, the everyday American has no fucking clue what's going on there, right? Totally. And so we're asking you to be good at your job, plus we're asking you to be a good investor. And so
that's where Hedgeye comes in.
One, there's professionals who can help, right? So some people just say, look, I have no clue. I'm going to hand over my money or the ideas to somebody else. The second thing is that people try and they actually screw it up, right? And so then what do? They go and they invest in some dumb stuff, right? And they actually lose their wealth faster. And so what ends up happening is, well, what if there was a currency that allowed the world to operate in such that when you earned your living, you could leave your wealth in that asset that you earned it in, and that asset was not inflated away, was not debased away. Right?
Yeah, no, I'll push back a little on that because I agree with what you're saying. What I
nobody ever comes in here and pushes back. I want some pushback.
No, absolutely. And again, it's coming from the perspective of someone who's kind of like not from the perspective of someone who's deep in the knowledge of crypto and Bitcoin, but more just someone who's kind of deep in the knowledge of kind of how the global economy works. Bitcoin can be one of 3 things. It could be a commodity that you speculate in, and it has a use and an end use and a cost of carry and a cost of production. It could be a currency, a medium of transaction. Or it could be money, which is supposed to be a store of value. Mm-hmm. Like gold and silver were money for the vast, vast majority of human history.
Why do you separate money and currency?
Because money is a medium of exchange. Money is how the person who manufactured this delicious Bud Light I'm drinking can get the stuff that I have so I don't have to carry gold to
currency. Currency is the way that you
currency's currency's how I physically transfer my wealth to him so I can purchase a good or service. Yep. And money is my ability to purchase that good or service. Mm-hmm. And so I think when you separate those things, I think Bitcoin kind of touches on all 3. But the one thing I think that it doesn't satisfy the money criteria, and this is my own personal view, at least not yet, is the fact that it's very volatile. Mm-hmm. Money at its core, and based on what you just told me about people not wanting to watch their wealth get inflated away, you cannot afford, if you're making, let's call it $1,000 a week, and you have a 2-bedroom apartment with 4 kids, to have your value, your light bill, your rent go down by 15 or 16% in a day or in a week.
Well, it's
that's
very
not money.
Much. It's very much.
That's a speculation.
Yeah, it's very much. So there's 2 buckets here. One is where are you in the life cycle of adoption, right? Yeah. When there's very low levels of adoption, it's much more volatile. As you get more and more adoption, it becomes less volatile. We know that it's becoming less volatile, but it's still volatile.
It is.
Right? And then the second is there's definitely various wealth levels as to how you are affected. So if you only have $1,000, you put all $1,000 into it, and then it fluctuates 30%. Well, that's 30% of your wealth.
Yeah,
right.
Totally.
If instead you put 1 to 5% of your wealth, right, and it fluctuates 30%, not as much, not as big of a deal because the risk is kind of contained to a allocation in your portfolio that is for what you would think as risky assets, right?
Mm-hmm.
So I think a lot of that is kind of where we are in the stage of adoption and also who is participating. But
quick question.
Yes.
Why? And this is a very dumb question in the context of
you know way more about the macroeconomy than I do. I probably know more about Bitcoin than you. So
probably you're being very modest. You're one of the world's leading experts in blockchain.
Darius is Satoshi.
Right, anyway, so what I don't understand, and this is more just this, take me out of the don't talk to me about the white papers and all that stuff. Yeah. Take me to like the whiteboard explanation of why the price of Bitcoin changes at all.
Okay. So, a couple of, again, relatively elementary or simplistic things, but still important to state, I think, is just to remind people about price. Mm-hmm. So one, price is a function of supply and demand.
Of course.
Right? Two is it depends on what you price the asset in. So the whole idea of Amazon stock, well, one Amazon stock equals one Amazon stock. No, we price them in dollars.
It's a numerator and a denominator.
Yeah, and so the dollar value is moving. Same thing with Bitcoin, right? It's the dollar is priced in dollars, so you end up with $1 equals $1. Inflation is kind of the hidden tax, right?
Totally.
And so that purchasing power is changing, but $1 equals $1. With Bitcoin,
$1. By the way, that goes back to what I said on the dollar-based credit system. $1 only equals $1 because we all agreed to use U.S. dollars, the basis for the entire global financial system.
So Bitcoin, if you live in a Bitcoin world, right? I always describe like there's two financial systems. There's an inflationary fractional reserve system that's dollar based, and that's how we all know, and we denominate everything in dollars. Then there is this deflationary kind of automated software-driven world that, let's say that Bitcoin is what you're going to denominate everything in.
Yeah.
Actually, in the Bitcoin denominated world, one Bitcoin equals one Bitcoin and has forever, just like $1 equals $1. Now, where you see the price volatility is what is the dollar worth versus Bitcoin and Bitcoin versus the dollars. And so there would be some people who argue, I'm not going to argue this, but some people would argue that the dollar is being devalued against Bitcoin, right? Yeah. Now, systematically and over a long period of time, sure, I'm all in on that. But the price volatility in dollar terms of it went from $1,000 in January 2017 to 20 to 3 to 14 to 7. I mean, that's a lot of volatility, right, in dollar terms. Mm-hmm. And so I think what ends up happening here is you get one hyper retail driven markets historically because there's not a lot of electronic trading. There's not a lot of the structures that are in place in kind of Wall Street in terms of smoothing price, right? They can't stop markets.
And valuation based frameworks.
All this stuff, right? So you have a relatively small amount of people who hold an asset. It's very human driven. And so all of a sudden everyone gets excited, price shoots up. All of a sudden everyone gets really scared, right? Price goes down a lot. So that's one aspect of it. The second is like the price discovery of this thing is it's kind of natural, right? If you would think about it, hey, there's this new asset, it's 10 years old. Yeah. People are trying to figure out what is it worth, right? Gold, we pretty much know, right? Totally. I mean, gold over a 10-year period, it's basically not moved, right? It's kind of, it's had fluctuations in between, but for the most part, it's been like dead money for about 10 years.
Totally.
When you look at Bitcoin over 10 years, it went from $1 to $90,000 in the last decade, right? I mean, nuts in terms of if you put $1 in and what it's worth today, right? So you bought $1 of Bitcoin 10 years ago. Today, that $1 is worth $90,000, right? Huge in terms of price appreciation, right? Or Bitcoin appreciation in dollar terms. But it's all because people are trying to figure out what is Bitcoin worth.
Totally.
Right? And I don't think anyone has an answer yet. Now, the one thing that I do think is really interesting is, so we go back to what's happening in repo markets and Federal Reserves and demand, and liquidity, all stuff. We don't actually know exactly what they're doing from a supply. Like you or I couldn't tell anyone how much dollars is being printed today, right? Now we can look at bank assets and we can kind of triangulate.
It's hard, man.
But we don't know an exact number with 100% certainty.
They're hypothesizing 3-month T-bills like 5, 6, 7 times. No one knows.
No one knows.
That's why the Fed is flying in the dark.
Yes. Yeah. Second is, I'll even give you a better stat. I forget the exact math. My partner Mark knows it. But there's like the Fed has been trying to guess the next quarter's GDP for like 248 times or something. Yeah, they've never got it right.
The Atlanta Fed, which was the biggest sort of advent in Federal Reserve history. This changed the way we think about forecasts. We're doing this nowcasting thing. And by the way, we've stumbled some of their ideas in terms of developing our own nowcasts, which are far more accurate. The Atlanta Fed's nowcast, and mind you, and I have a lot of respect for these people. They're really smart people. They have a intra-quarter tracking error of 240 basis points on a number that can basically be 0 to 300 basis points.
It's crazy.
It literally, this quarter, on November 13th, their Atlanta Fed tracker went to 0.36%. Now it's 2.36%. Like that, if as an investor, I mean, maybe that's great if you're an economist and you're a PhD economist. That is shit for an investor. I don't know if I can use profanity.
Yeah, you can.
Yeah, sorry.
We're drinking beers. You literally Bud Lights.
Sorry.
But all right, so here's the thought process. If we don't know the supply of dollars, right, we can guess and get close, but we don't know for sure. Mm-hmm. And then we don't know demand either. So there's a bunch of models that let's model supply and let's model demand. But basically what we're doing is we're guesstimating on both of those things, and we come out with price, right, or what the output of that equation is. So supply, demand, we end up with a result. With Bitcoin, we know with 100% certainty one side of that equation. So we know supply. Today, 1,800 Bitcoin were created and put out into circulation that previously were not in circulation. Mm-hmm. That happens every single day for 4 years. In May 2020, it's going to get cut from 1,800 to 900, right? And so that supply schedule is known, it's transparent, it's predictable. When you add in the fact that if I can know with 100% certainty the supply schedule of the currency, now I just have to worry about modeling the demand side, right? So thinking about the future value of something. Well, let's say that you and I are really bad. We're just as bad as the economists, the Federal Reserve, et cetera. And all we say is we're going to be super simplistic about it. We're simply going to take the rate of demand that has occurred for the last 11 years, and we're going to extrapolate it out with no rate change. Totally. So no increase, no decrease. We're just going to say it stays the same. We could be wrong on that, but just saying that. As you do that, what ends up happening is because you know the supply with 100% certainty and you just extrapolate out, what you get is a continued increase in dollar terms of the value of Bitcoin because artificially supplied asset demand increases. Well, the US dollar value is going to go up.
Totally.
And so I think this is where you see folks in the macro economy world, right? They're too smart. Like I'm convinced that most of them, they're like, it can't be that easy.
They're a lot smarter than I am.
Right? That's for sure. They're literally like, it can't be that easy.
Totally.
But if you go back to just the pure basics of supply and demand, what occurs is that's the value, right? So, and this is the key piece. The value is pretty well documented in terms of a lot of these models and stuff because you have one input that you know with 100% certainty and you can just extrapolate demand.
Totally.
The price is what's volatile.
The price is what's volatile, and the price is quoted in the unit of something else.
Yes.
And this, to me, is the fundamental. I don't want to use the word issue because it's not
flaw.
An issue. It's actually not a flaw. No,
okay.
I'm looking for a more elegant word. I think this is the fundamental problem that Bitcoin and crypto in general still need to solve. If you and there's two problems. One, you have to decide whether or not you're trying to usurp the dollar-based credit system or you want to compete alongside the dollar-based credit system. Pick your poison. If you want to usurp the dollar-based credit system, then you can no longer quote your price in dollars for obvious reasons.
So I think that this is the biggest difference between Wall Street and the hardcore Bitcoiners. The hardcore Bitcoiners are denominating things in Satoshis, which is the smallest unit, right? Think of it as like pennies or whatever, or BTC.
Yeah.
The finance, I want to put it in a portfolio with a bunch of other assets, etc.
It's dollar-based
all
assets.
dollar denominated.
Yeah.
And so what's interesting, and I don't have an answer for this, can it be both? Can it serve one purpose for one community and another community basically takes that same asset that's serving that purpose in the Bitcoin world and then dollar denominate it and have it serve a purpose for them as well? I actually think it can. What I don't know is how does that perform in down markets? How does that perform in these other economic type cycles, not just the longest bull market in history where basically every asset's going up and to the right just because we're printing things to the moon.
Well, and also, let's play a thought. You gave me a thought experiment. Let's play a thought experiment where the dollar is no longer the asset that settles global trade, that settles global credit, but also, by the way, it's probably somewhere between 500 billion and $1 trillion in global derivatives.
Oh yeah.
If the dollar gets replaced by anything, I don't care if it's Bitcoin, empty cans of Bud Light. If anything, there will be chaos. There'll be wars. There'll be death. Mm-hmm. There'll be people scrambling to replace the system. Mm-hmm. There'll be big guns and tanks and nuclear bombs. This is the problem with, and again, I don't want to use the word problem because I think there's an elegant solution here that is well above my pay grade. But if you want to usurp the dollar-based credit system, you got a hell of a lot of hate to bill and a lot of really angry people with a lot of big guns.
Well, it's basically you're essentially taking away the power.
You're taking away the power of government.
Yeah,
they have a vested interest in remaining in power.
So this is where you get deeper down the Bitcoin rabbit hole, right? Mm-hmm. Which is
I don't think this is deep. I think this is topical.
Well, so there's two components that I think most Bitcoiners either one believe or think is a higher likelihood chance than people would admit. So not necessarily saying it's a 90% chance, but just saying, let's say everyone thinks that this is a 1% chance and they think it's 5%, right? Or
what
is
the chance here?
Well, let me tell you what it is, and then I'll tell you what it is. So the first is the separation of state and money. Mm-hmm. So exactly what you're talking about, right?
Oh, yeah.
The state, one of the most powerful weapons it has is the fact that they control the currency, money. But even more so, the United States controls the global reserve currency.
Yeah, totally.
Right? We've done a fantastic job of weaponizing it, all this stuff.
Yeah, we do.
There's also a lot of noise internationally that people want to get away from the dollar-based system.
Good luck.
Whether it's Russia, China, Iran today was talking about it, et cetera, right?
Good luck. You know who the world's, I don't want to cut you off, the emerging market world's largest dollar-denominated borrower is?
Venezuela.
China.
Oh, China. Oh, yeah.
China. These guys can't get off the system.
Yeah. Well, so that's one piece of it, is this separation of state and money. The second piece of it, though, is every global currency. Yeah, give me another one.
Absolutely.
We're just gonna go through.
I'm on my 30s on his fourth. I'm on my fourth. He's on his third beer.
Is every global reserve currency that has failed for one of two reasons. It was debased away, or there was conflict,
and they tried to extend themselves too far.
Well, and somebody else basically, your country has all of the power because you have the currency. I come in, I basically kill all of your people. Now I'm in charge because I'm the most military power, highest military power.
You need
now
guns.
Now I put my currency in place. So debasing the currency, every country in the world today is already doing that. Right now, they're doing it in a very controlled manner. Right, it's all these things, but every single currency that is a fiat currency is being debased away. So that's kind of, the countries are doing it to themselves. They're eating themselves alive in a very slow manner that could last hundreds of years. Right?
By the way, one quick thing, and I'll let you keep going. It's impossible to run a fractional reserve banking system and not perpetually debase.
Of course.
That's the whole point of the system. Exactly. When maturing credit, you need somewhere to put the new money. You need inflation. You need growth because there are more people coming down the pike. There are more people with needs and demands for homes and demands for goods and services. This is once you start that, once you let the can out of the worms or the worms out of the can, you can't put them back in.
Absolutely. So that's one piece of it. The second piece, though, is, and this was a thought I had about 6 months ago, whenever I wrote it. In the physical world, the most powerful military has the most guns, the most soldiers, the most, the best airplanes, the best ships, all this stuff. In the digital world, the best offense is the best defense.
Yeah.
So what I mean by that is, if I hack you, or you're another country, I'm an adversary, I hack into your electrical grid, your nuclear system, whatever. You essentially are under attack until you kick me out.
Yeah.
Right? Now you can attack me, but if you can't get in, I'm the most powerful, right? Yeah. If I get in and you kick me out, then again, you can retain power as long as you keep me out. Mm-hmm. So if defense is the best offense in the digital world, the most or the strongest computing network in the world is Bitcoin. It has more computing power securing that one network than all other computing networks that exist. So there's nothing more powerful.
Can I push back on that a little bit? Because one of the things I thought is so fascinating about Bitcoin is just the sort of the energy intensity it takes to mine Bitcoin.
Yep.
What if you cut off Bitcoin power supply?
So this is as you get into this, right? What you realize is, okay, there's a ton of computing power that's securing it. Very provable in terms of it's nearly impossible to deny.
Like human capital. What about the actual electricity?
The machines. So there's more computing power, meaning the machines, that is securing that network than any other computing network in the world. So you could spend billions of dollars if you're the United States, China, whatever. You can't hack the system.
Why wouldn't I cut off your natural gas supply and prevent you from turning your lights on?
Because, and this is the key piece of Bitcoin, you couldn't.
Not I.
Yeah, you couldn't do this any other way than the way that it grew. it's so decentralized, meaning that there's so much computing power in each area of the world.
You're right. There's no one to attack.
Well, here's what the United States is. Cool. We're gonna shut off all electricity in the United States. We don't know who's mining, who's not.
You would have to do that.
We're gonna
you target large scale mining or large scale consumption.
Even if you cut off everyone in the United States, Bitcoin would continue running, right? Now, let's say that two countries said, "Hey, we're going to do it." So
I see
the U.S. and
it
China
requires unprecedented global coordination, and you would never get that from any.
It's nearly impossible, right?
You already have the two largest geopolitical powers in the world beefing, and they're going to keep beefing until
even if they agreed to coordinate along with a bunch of other countries, Bitcoin networks still keep running on this, right?
Exactly. You know what I think they're going to do, and our demographer know-how is really thoughtful on this topic. I'm sort of sourcing some of his ideas. Governments are really good at playing copycat. If this shit works, they're gonna want to. Well, they're gonna take all the greenbacks out of my wallet and out of your wallet, and they're gonna transition them to a digital currency.
Yep.
And I'm not sure whose technology they're gonna steal, or if they're gonna enlist CIA types to create this. But we're moving in the path of Federal Reserve wanting full control over the quantity and price of money. Right now, they have partial control over both.
Yep. Well, and this is, I think, where there's this guy, Alex Gladstein. I'll send you a bunch of his stuff. So he's the chief strategy officer of the Human Rights Foundation, right? And so his life has pretty much been dedicated to what you and I would consider more philanthropic and kind of socioeconomic issues, et cetera, but in foreign countries. So things around freedom of speech, independence, self-sovereignty, et cetera. But not here in the United States for the most part, usually somewhere else. He's brought up the point, which I think is a very valid point, which is as these countries go and move to digital currencies, pretty much every country in the world is talking about these central bank digital currencies, right? They want to create a digital currency, same monetary policy. They're in control. They can print, they can remove, they can do whatever.
Group of crooks making the policy settings.
What it does is it drastically increases their surveillance capabilities.
Of course, that's the whole point, right?
You take cash out of the system. Now I know where everything is. I increase my tax revenue, all this kind of stuff.
Totally. They're very incentivized to do this, by the way.
And so when that happens, Bitcoin is the only digital currency that has the pseudonymity, right, or the anonymity, depending on how you use it, and has the security to withstand state-level attacks, and is not geographically constrained in terms of centralization, et cetera. And so what it's going to do is it's going to be the only way that people can opt out, use digital money without providing the surveillance capabilities to the state.
So I completely agree with that. And this is cool. We're digging now into like Revelation in Bible terms. It's called the mark of the beast. And I genuinely believe, and my brother's a biblical scholar, or at least now he is. I genuinely believe, and I don't want to get too far on this topic because I now I'm like a heretic, but there's going to be a mark of the beast, and I genuinely believe that it's going to be a centralized currency or a series of centralized currencies where you can only transact, you can only be quote unquote on the grid in a centralized currency, and something like Bitcoin will allow people who defect from that grid to sort of remain.
It's a separation of state money.
But don't forget, when you deny the mark of the beast, it says in the Bible, you deny your access to food, you deny your access to education, you deny your access to shelter. You're basically choosing to live in the wilderness just so you can, quote unquote, maintain your purchasing power. I don't know how many people are going to choose to do that. And by the way, this is written thousands of years ago in the Bible.
That may be the fairest argument against Bitcoin, right? So people always ask me two questions. What's the best argument against it? What's the most likely reason why?
And mind you, I'm not arguing against Bitcoin. Yeah. I'm just playing devil's advocate.
But what's the best argument against it is actually Bitcoin does exactly what people think it's going to do, and nobody cares, or it's too inconvenient. Right. So basically, even though it's better technology, blah, blah, blah stuff, it's just too inconvenient. People don't care. Right. They're not going to change. They can't mentally shift from dollars to BTC. All that.
I don't think it's a mental shift. I think you can't. There's going to get to a point where you can't physically shift if you want to maintain your status quo.
It is possible.
Your status quo that's being eroded by inflation.
Yeah, it is definitely possible. So that's one. Two is what is the most likely cause that it fails? It's actually a self-inflicted wound.
I don't think it's going to fail.
Well, so the developers end up creating some kind of bug, et cetera, right? That could fail. To me, that's the biggest risk. It's not state level attacks, all this other kind of stuff. It's just somebody makes a mistake, right? Now, the beauty is that the process is pretty thorough, right? And quite extensive in terms of reviewing code, et cetera. And so it's unlikely that it happens. But to me, that's like the biggest issue.
Yeah. And again, like I wouldn't use the word fail. Like everything has an issue, right? Like we're humans. At the end of the day, we're talking about measuring. And I think this is the most valuable part of money, and that I don't think Bitcoin touches. I don't think the U.S. dollar touches. I don't think any of these things touch. I think the only thing that really touches this is probably something that you can physically. I'm not a gold bug at all, but I do think it's got to be something that we all have agreed to agree on for thousands of years that this has some value. And this is why I think gold is probably the purest form of money, is because money is really just a unit of human time. Mm-hmm. I'm basically amalgamating.
Man,
yeah, I'm neither of these things. I need to do more research to figure out what I think I want to be in long term. But I think there's a reason for all of these things in your portfolio. And I don't want to say portfolio like I'm trying to invest in this.
Yep.
I want to say like in your life portfolio.
Yep.
Like you need, like when I pay someone for something, it's not because I want it. It's because I'm acknowledging that it took him time of his perpetual human life that will eventually end to create this good or this service. So I'm transitioning some of my time for some of his time.
So the best thing that I've told people that gets them immediately to realize that Bitcoin has value is one currency, which is the dollar, is inflationary in nature, and so it promotes consumption.
Yeah.
Right. Get out of this. Buy things. Buy things.
Totally.
When you go to a deflationary structure, right, with a disinflationary monetary schedule, all of a sudden you're incentivized to save.
Yeah.
You're incentivized. My time is very valuable.
My time is valuable.
Pay me this, and I'm going to hold this, right? Because that's how valuable my time is. And I think that mindset shift is really, really hard for Americans, right? Just because it's consume.
Yeah.
But also too, it's driven by the dollar, right? And the structure.
Agree with that.
So I think, look, you're going to do more research. We're going to bring you back, and you're going to be a full-born Bitcoiner, because I can already tell you think a lot of the same things that Bitcoiners think.
I think
you just haven't spent the time yet, right?
To be frank, I mean, I've thought about. I mean, I'm a conspiracy theorist at heart. Yeah.
Who do you think Satoshi is then?
I don't know enough about Bitcoin to say. I mean, I know who that is supposed to be. I don't know that we know who he is.
Okay.
I think it's a concept, to be totally honest with you.
Yeah.
I think it's probably a group of people. But I think it's supposed to represent like, hey man, you're looking for me. I don't exist. That's the fucking point.
Marty Bent is a guy in the Bitcoin world, and he used to work at Barstool Sports. So he's a cool dude, and he calls it the Immaculate Conception.
Yeah.
Right. It's a religion. Money's a religion. Right.
All this is religion. I'm wearing for the reviews. I'm wearing a gold chain, and the reason I'm wearing a gold chain is because when I grew up. All the people that had societal value to me wore gold chains. And these are rappers, these are athletes. Unfortunately, I'm not from the kind of communities that, thought people like Bill Gates or people like Jeff Bezos had societal value. I didn't know who those people were. I didn't have the internet. So to me, that is what's valuable to me. But value is a transferable it's a transferable concept, and it's a non-transferable concept. And what I mean by that is you can pay someone money to do something for you, or currency to do something for you. But also, what's also valuable to me is like I have a letter from my girlfriend. That's only valuable to me.
So you'll love this. One of the things that I'm fascinated by is the cultural icons that you and I grew up with. We're about the same age, and I remember like very distinct moments growing up. So the first is when Jay-Z's Big Pimpin' came out, and he had the music video on the yacht, right, with the girls.
I'm not gonna lie to you. 2 days ago in the shower after the gym, I sort of was mimicking Jay-Z's dance in that video when the song came on while I was in the shower. In the shower, not kidding. This is 2 days ago, by the way. So we share a lot of the same
so
cultural
Big
similarities.
Pimpin' was a big moment. The second was Nelly, Country Grammar.
Yep.
And you just heard that initial. Yeah. Oh man! And everyone just stood up in the room. Everyone kind of looked around. Yeah.
You look around like, okay, who's the available chick in the room? You.
So that was the second. The third was first time I ever skipped school in high school. Carter 2, Lil Wayne came out.
Oh my God, man.
My buddy was like, hey man, Carter 2 came out. I was like, what's that? He's like, it's this fire CD. I was like, I'm there. And we went and skipped school and went and bought it. So those guys, right, who were these like cultural icons, right? Allen Iverson, all this stuff. Now what's happened? I didn't even throw Michael Jordan, like all these guys.
For our era. This is our era, by the way. We're
there's a
early to mid 30s.
There's a very direct line in the sand where half of them made horrible financial decisions, right? If you look at Allen Iverson, Lil Wayne, all these guys.
Because they didn't have any coaches.
Zero.
You grow up in these communities, there's no one saving and investing money. It's not even about how I spend money. It's I literally don't know how to invest money. I don't know how to open a mortgage, start a mortgage. I don't know how to open an investment account. I don't even know who to call if I want to fucking buy the stock market. So, it's literally a lack of resources in education.
Take those guys, and on the other side of the line, Puffy, Jay-Z, right? All these guys who Jay-Z's a billionaire.
What the difference is between them? They surround themselves with really intelligent people.
Absolutely. One of my favorite things is that Jay-Z and LeBron James, both when they got first hit it, called up Warren Buffett and said, I need to come see you. You're supposed to be the smartest guy in the world on this thing. Tell me what to do.
That's
right?
the difference.
LeBron James, 18-year-old kid, who by the way, to me,
legend.
He
never got in trouble.
That's my point, right? Like 18 years old. He was 16, I think, and he was on the Sports Illustrated cover, The Chosen one, all stuff. From 16 years old till today, he's played in the NBA now for 17, 18 years. The most minutes
ever.
Right? The dude, you've never heard affairs, fraud, no tax issues.
The worst thing you can hear about LeBron is that he's too nice of a teammate. That's the worst. This guy let J.R. Smith get the ball in the NBA Finals. Like, my man, like, this is how that's the worst thing. And so carry on. But again, I agree with your point.
And so when you look at that, that's somebody who, by the way, grew up with a single mother.
Yep.
Right? I actually think the last scandal he was involved in was when he was in high school. He somehow got remember he got the 2 Mitchell and Ness jerseys and like a Hummer or something. Like,
it's not a scandal.
There was something that happened, and all of a sudden was freaking out. And so what did he do? He just said, just take it back. Like, I didn't, whatever.
If getting stuff for free is a scandal, then who are all these, like, and I'm not even going to be gender biased, anything. There's a lot of people who are much younger than me who clearly don't work and earn the same level of income that people like you and I make that live in our buildings. And I'm like, how do you live here? And I don't mean like they shouldn't live there. I mean like somebody's paying your rent. And this is a very New York City thing, but it is what it is.
So my favorite by far is the individuals that at Ohio State took their cleats that they owned and sold them and got in trouble for it.
Oh, and the tattoo thing? It's like, my man, I'm friends with the guy who runs the tattoo shop. I can't get a tattoo. So my uncle can put $100,000 in stocks in my portfolio, and that's fine. But if I get a tattoo, it is. It's institutionalized racism. We don't need to go on a tangent on that. But that's what that is.
I am there's 2 things that are happening in the world right now that I'm incredibly happy over the last 6 months to come out. One, the NCAA is going to allow athletes to start making money off their likeness.
Off their likeness, yep.
So you can't get paid to play, but I can go put my face on a poster.
That's fair.
Sign
fairest
it,
way
whatever.
to solve it.
Whatever. So look, you want to be famous, right? And get paid that way, but don't get paid to play. Fine.
Yep, I agree with that.
Second thing is the SEC is looking at opening up the accreditation laws to allow more people to participate in the private markets.
Say that again. The SEC's open.
SEC is so. I got this.
So you no longer have to be an accredited investor to do a private deal.
They're going to change the way that they define accredited investor.
Like lower the threshold from $1 million.
So that would be part of it. We'll see if they do that or not. But the biggest piece is that it would be education based.
I agree.
Take a test. I've yet to meet somebody who doesn't agree with that.
Yeah, totally.
Just take a test.
Just take a test. If you got by the way, no one's gonna want your $30 on a take private. Like they're not gonna want it. But if you can, if they actually want, you can crowdsource $30 at a time. You and I can go on Twitter and raise $2 million tomorrow if we needed to.
So I wrote a thing literally today that basically says accreditation is violating the American dream.
It is.
And is discriminating against millions of Americans based on wealth.
Yeah.
It's definition.
But tell me, guess who writes the tax code? It's Congress.
Shocking.
Everybody in Congress is a millionaire. Everybody in Congress is a vested interest in keeping the game going the way they designed it.
They all wrote books. None of them did insider trading.
No, yeah, of course.
All right. Listen, before we wrap this thing up, I got to ask you, aliens and dinosaurs. What's up? Believer, non-believer?
Oh, yeah. I definitely believe in dinosaurs. I don't think you can
in dinosaurs? All right. So here's my question on dinosaurs.
You can argue with.
Every dinosaur you and I have ever seen pretty much looked the same. So when they say pterodactyl, we know what that looks like. T-Rex, we know what that looks like.
I think those are renditions. I disagree that they look the same. I think what we saw.
No, we've both seen the same model of what they tell us they looked like.
Yeah. No, I disagree that the model is accurate. That's what I'm saying.
So my big question is, and I saw this meme on the internet. Now I'm fascinated with it. You think that the dinosaurs had hair? Like hair like you or I, in terms of every dinosaur you've ever seen? None of them had like mullets or long hair or anything. Think about a dinosaur you've seen that had hair. None of them.
Again, so I'm probably all right. I'm 4 beers deep here answering this, so just keep that in mind. Fine. A caveat.
What's the Bud Light answer? Did dinosaurs have hair?
Okay, so yes, dinosaurs definitely exist because we have the technology to sort of date carbon and things of that nature. So I agree with that. But again, these are like when. I used to collect rocks as a little kid. I mean, I'm telling you, when I said I was poor, I was very poor. We didn't have anything going on at home. I would literally go outside when I was like 5 to 10 years old and just find cool rocks. Rocks that I thought were cool. I know shit about them. You couldn't look them up on the internet. There was no internet back then. At least not for us. But when you grab things out of the ground, it's not like just one dinosaur its bones are perfectly preserved in the position it died in. It was thousands if not millions of years ago. You're going to get 2 or 3 bones most as an archaeologist, and you have to freaking imagine what goes where, what it's supposed to look like. These are all renditions based on artists and archaeologists and their imagination. So give them some credit for trying, but don't necessarily say that's what a goddamn Tyrannosaurus Rex will look like. We don't fucking know.
The New York Post had an article the other day that basically said there's wide-held belief in the scientific community that dinosaurs became extinct because asteroids hit the Earth. So there's this big asteroid impact and a bunch of dinosaurs died.
That's false.
Well, that's what science believes. So what the New York Post wrote an article, which, by the way, credit to New York Post for doing hard-hitting journalism on the science. They found a report that basically said now there's this study that shows there was a very large volcanic eruption, and there was increased mercury levels, which they believe actually was leading to the extinction of dinosaurs before the asteroids hit. And so they basically were calling bullshit on the science community, which I found quite funny because
they're both wrong, and the reason
nobody knows.
And I was going to say the reason they're wrong is not because that's not what the actual occurrence was. It's because no one fucking knows. Yeah, exactly. It's like, don't present anything as and this is one thing that we were, to take this back to finance and whatnot. And I'll end with that question. I have a secondary question for you. And
we're still talking aliens.
We're still talking aliens on. But before we truly conclude, I'll go there. But no one knows, man. The biggest issue with what's going on, and I think what the coolest thing about Bitcoin and crypto and the information era that we live in now, which is 10, 20 years old, is that information is decentralized now. Not just currency and money and commodities, it's information. Think about where I am. If I graduated with what I knew coming out of college in 1989, I would be a freaking janitor. Do you know how much statistics and advanced theories on macroeconomic theory I've taught myself just watching YouTube videos, just reading
YouTube's
white
the
papers,
best university in
reading,
the world.
It's the best. These are I probably have the equivalent of multiple PhDs in economics and statistics. And it's not because I majored in these things at Yale. It's because there's information is now ubiquitous and I can go learn it and I can teach myself and learn at my own pace for the last 10 and a half years.
Do people get mad if we both together put YouTube PhD in our Twitter bios?
I am one of the YouTube PhDs and I'm proud of it.
Yeah.
I'm absolutely proud of it.
Because it's a self-starter aspect.
It's actually helped me. If I actually graduated from Yale knowing everything I should have remembered from economics and ivory tower, macro and micro P, all this gobbledygook that they preach, I would be fucking terrible at investing. These people don't understand how the real world works. They understand how their models work. And that's a very different thing. So I'm actually quite blessed to have grown up in this information age and sort of self-taught myself the shit that actually matters. Because there's only so much stuff that actually matters. That's one of the great contributions Ray Dalio has made to our industry is that, hey, man, you guys are all looking at all this crap. You're all being macro tours, but these things actually matter.
I couldn't agree more. Speaking of things that matter, aliens, real or not?
Again, this is one of those things we have no empirical evidence to prove. So the concept of real needs to be massaged a bit, right? They're real they're real in the sense that if people believe they exist, because all of this is.
Is there intelligent life outside of Earth?
Well, I'm very religious, so I believe if God's not on Earth, then yes. But again, I wouldn't need to talk about religion here. Let's go back into a more sort of existential concept. Something is only real in the human sense if a human can observe it and or believe it.
Agreed.
If a human being can observe and or believe it, or actually I'll take it the other way around. If a human being can observe it and or believes it, then it is real because there's no other plane. We only live in this dimension.
Yeah, it's our perspective.
It's our perspective. We're viewing, hearing, touching, tasting, feeling things. If there's no other plane where something can exist that we're not touching in one of those senses. So to answer your question, yes, everything that people say is real, that they truly believe is real, but it doesn't necessarily mean you can observe it empirically.
Yeah,
so you have to separate those.
What you're basically talking about is if aliens were invisible and they were all around us, but no one ever realized it, there was no scientific proof of it, etc.
So you just have to find out what you mean by real. Is it real because someone believes it, or is it real because there's an empirical evidence of it?
Do you believe that there's intelligent life outside of Earth, other than religion?
I believe it because other people believe it, but I don't personally believe it. So there's obviously no empirical evidence. I believe aliens. Sorry. Take this back. I believe aliens exist because other people believe aliens exist. Not
so you
because
believe
not
in the mental image of aliens
everything,
more so than like an
yes. There's no other plane to discuss. We only live in this universe. There's no thing. If someone in this universe thinks aliens exist, then we have to acknowledge that aliens exist because we're talking about it right now, aren't we?
Facts.
Aliens do exist.
I talk about it every day.
You and I are talking about aliens right now.
So the reason why this question I ask every podcast episode is because one day I was laying in bed and I was like, "Fuck, you think aliens got pets?"
Oh my God. Jeez. You were laying in bed and thought of that?
Randomly, and I turned to Plynn and I said, "Hey, you ever thought about if aliens have pets?" And she's like, "Go to sleep."
By the way, congrats. I don't know if you guys don't know. I'm sure you posted on Twitter, but you just got engaged to beautiful woman, awesome woman. I don't know how the hell she puts up with you, but shouts to Belina.
Darius is he's seen me at my worst and at my best. So
absolutely,
she's winning in this relationship for sure. Well, actually, I'm winning.
I was gonna say you're definitely
I'm
winning
by sure, but she makes me better. So yeah, I was laying there and I was like, you know what? Aliens, everyone always looks at them as one type of homogeneous species, right? Like Independence Day, all these movies, right? Why don't they have pets? I bet you they have pets. Like, or is there not like a multi-species type
I think people
organism?
Would be uncomfortable drawing alien pets. Because then that, by definition, you now making the choice of who or what type of alien.
Joe's giving you the side eye.
We're in the 2009 post 2009 era where you can barely say I drink Bud Light and not have people come at you on Twitter. You know what I mean? Like, if you believe aliens have pets, then you're now making a decision of what type of alien or what type of being is an alien pet, and now you're talking about discrimination, all these other things. Like, mind you, I'm a black dude from the hood. Like, few people in the world have been discriminated against me more than I have, certainly in this country. I get the discrimination thing, but let's lighten up a bit, folks. I mean, Jesus Christ, like, check your emotions at the door and let's learn how to make money together.
I'm a really big believer in what they call Bud Light politics.
Mm-hmm.
And Bud Light politics is basically if you think you disagree with somebody, you have to drink 3 Bud Lights with them before you can agree that you disagree with each other.
Oh, I love that. That's a good motto to live by.
And so literally, if you go and drink 3 Bud Lights with somebody and you walk away saying we still disagree with each other, then you actually disagree. But like, I don't know,
by the way,
20, 30, 50% of people would actually find out they agree.
It's okay to disagree. Just don't hurt anybody. That's a great
way to look at it.
I don't even necessarily believe in the golden rule. Like just do whatever yo, my man, let my man cook. My man, you can cook as long as you're not hurting anyone.
Yep.
And I think the concept of pain and hurt are fairly universal. I don't think we need to go too far into defining those. Just don't hurt anybody. If you want to do some weird, creepy stuff or do this or that, just let people cook, man. China, let the people in, was it Wuhan? What's the name of the province?
Oh, yeah, I don't know.
Let the Muslims cook, brother. Let them cook.
Yeah.
Let the people in Hong Kong cook. Let them cook. They're not hurting you. Yeah. You're still in control.
Let them do whatever
they want.
You
have the tanks. Yeah. All right. All right. So before we wrap up, I'm now being a podcast host.
If Darius had a podcast, he'd be top 10 in the world easy.
I probably would. I would also get fired by all my clients because I have a very, very loose filter, as you can tell by this Bud Light consumption.
He brought Bud Lights to the first podcast episode.
Hey, man, look, I drive better 3 to 4 beers deep, Bud Light specifically.
Okay.
I invest better 1 to 2 Bud Lights deep because I'm less gun shy. What else do I do? I do some other wink things better when I'm 6 to 8 Bud Light deep.
All right, what's your question?
All right. Question.
We got a PG podcast.
PG podcast, absolutely. All right. So this is my favorite question I like to ask people, certainly, right. and I think you would be one of the best people out there in our respective communities, in our sort of co-joined community, because you understand hip hop and the culture.
All right.
You know. If you had to design a Mount Rushmore of hip hop,
oh man,
who do you put on it?
How many people do I get?
4. Mount Rushmore.
No,
no A's and B's, no extra guy, no 1A, no 2B.
Does a group count as one?
A group can count as one. I'll give you that.
Man.
It's hard, huh?
No, it's not hard at all. NWA, Biggie, Tupac, and Lil Wayne.
Wow, that is the quickest response.
And by the way, I honorable mention Jay-Z could switch with Lil Wayne in my opinion.
Wow, that is, ladies and gentlemen, I've asked this question to dozens of people, and I have never, ever had anyone respond in under 3 to 5 minutes. There's usually a 2-minute pause, like, oh man, this is hard.
All right, so let me explain. NWA, greatest group of all time. Anyone who says it will fight.
All right, well, I'm not going to disagree with you.
Biggie and Tupac is probably the greatest rivalry ever, and they had the perfect combination of entertainment, the kind of lyrics, and kind of just their mastery of the poetic aspects of rap, and then you add in kind of the violent components, the coast, etc. Just like that's like
exposing people to the
that's probably just like the golden age of hip hop, right? So you get those three. Lil Wayne I put up there because Lil Wayne was probably the first guy, at least of my generation, who really took what was more of kind of a raw underground hip hop type community and pulled it into what we consider like the pop world today, right? Or kind of the socially acceptable world today. So NWA was the first time that there was like somewhat crossover, I think, into you had like white dudes who didn't live in the hood who are running around, singing NWA lyrics. Eminem and Lil Wayne are probably the two that started to pull it. Jay-Z's just the fucking GOAT, though. Right? So when you put those up there, holding it to 4 is pretty hard because you can very quickly spider into all these other ones. But I got to go with NWA because I think they're the best ever. Tupac and Biggie as just a duo that coexisted in a world where like we'll never see that again in our lifetime. Because the thing also was at that time when they said, yo, I'm going to shoot you, it was like 80% probability they were serious.
Yeah. And by the way, we're not glorifying violence. This is America, folks. People go to the movies to watch. I'm using Arnold Schwarzenegger because that's popular in my day. But like people go to movies to watch violence. Hip hop is a depiction of violence that America craves. UFC, boxing, football. Yeah. It's the same depiction of violence, just in a lyrical art form.
I'll take a step further. Hip hop is a mirror of society, and people don't like looking in the mirror. Oh, man. So what ends up happening is if you look at all, especially the first three, right? So if you look at NWA, Biggie, and Tupac, they weren't making stuff up. They were literally they were literally just creating music about their day.
It was truth,
right? It was, hey, this happened yesterday, or this happened a week ago, whatever. And what ended up happening was that really resonated because it was this raw authenticity. Yeah. And so if you think about those like earlier days of hip hop, it's very different than today, where I think it's more of people have figured out like the algorithm, right? They realize like, okay, here's the type of music I make. Here's the beats that I need to use. Here's how we're going to distribute it, et cetera. Things go viral.
Music in general is a science now.
Yeah. And so I think that, but it's also why you see guys like, I don't know, Chance the Rapper, right? Mm-hmm. And some of these guys, did you watch, what's the Netflix documentary that came out recently on?
The answer is probably no, because I don't watch TV, but.
No. Who? It's the dude who's dating one of the Kardashians.
Bro, I live under a rock, man.
What? No, it's not Kanye. It's Westworld or whatever. Travis Scott. Yeah. Travis
I know
Scott.
Who that is. Yeah. There's no way I watched it on television.
So Travis Scott, basically, he's very similar in that, like, it's just go in the corner, right? So you want to know a fun fact?
Yep.
I talked to a very well-known producer recently, a music producer, and we were talking about something, and he goes, oh, man, making music so easy today. I go, what do you mean? He goes, dude, this is what I do. I send beats to people. They literally like are on their tour bus, or they go in the bathroom at like a rest stop or something, and they record the lyrics on their phone. Like literally go to like voice memo.
Oh, my God.
Email it to him, and he takes that voice recording and then mashes it up, and bam, you can have a hit song.
There's so much technology to change it now.
And I said, excuse me? And he goes, oh, yeah, dude, I could just hit up 3 dudes and be like, yo, give me a verse. Here's the beat. And literally they're just recorded on their phones and send it to him. Then he can mix it all up. And then you got a song that nobody ever saw each other. So literally everyone was in different locations. They just send them the files.
And just to quickly interject, what you're talking about is the information age, the technology age. It is just quicker and easier to do everything that human beings used to toil and struggle over. So guess what? To me, that's deflationary. Because you need less things to change that unit of time for.
I'm going to end with, you got to answer, who's on your Mount Rushmore?
Oh, okay. So
Because I know you thought about it.
Oh, I've definitely thought about this. This to me, it's one of the coolest discussion topics out there, and hopefully it starts a good debate on Twitter. I think you have to decide what your Mount Rushmore is, and no. I'll be quick. I'll be quick. You have to decide what your Mount Rushmore is. My Mount Rushmore are the people who were the 4 most relevant people in hip hop, but not necessarily the 4 most relevant people in hip hop according to one generation. Because I do think now that we're seeing guys like Jay-Z turn 50 and we're seeing Diddy and Jay-Z be billionaires, we have to acknowledge that on the other side of that, there's a whole community of people that are 14, 15, 16 that are listening to hip hop and have no freaking clue where those 99 bricks went or 96 bricks went. That's a Jay-Z reference. And they don't even know where those bricks are or where they were. But so anyway, my point is
Marcy Projects.
Is Marcy even projects now? It's probably like a nice community. That's what happened in my neighborhood in Seattle. Not to digress. Anyway, so Jay-Z, obviously.
Yep.
Jay-Z was huge in the 90s. Arguably one of the 2 or 3 best lyricists ever in hip hop. In terms of raw talent, the most raw talented MC. Second most raw talented MCs. The next one's the most raw talented. Jay-Z's the most raw talent because he didn't write anything down. He was very unique in that sense that he can come in and there's many
savage.
There's many recollections of him. Like when him and Cam did Welcome to New York City, he said, Cameron said, quote, Jay-Z walked in there, heard the beat, and in 6 minutes he was walking out of the studio. He laid down one of the most classic hip hop songs of all time in 6 minutes, just thinking in his head and freestyling.
So I know you didn't listen to the episode, so I got to tell you. So the music producer I was talking to is Ryan Leslie.
Harvard guy, right?
Yeah, Grammy nominated, etc. We're talking about something else.
Yeah.
But he came in, he did an episode, and he told me a story about Jay-Z. So he was one of the producers on the Jay-Z Kanye album, right? And they were in Australia. And while they're in Australia, Jay-Z woke up. He did like the Oprah show or something in the Sydney Opera House. Then he took Beyonce on like to some location. They did whatever. Goes through the whole day. They have dinner, all this stuff. They start recording music. It's Ryan Leslie as the producer, Jay-Z as the artist, and there's like an audio engineer sitting in the living room in this house they rented in Australia. It's 3:00 in the morning, and Jay-Z's just going hard, all stuff. And all of a sudden, he stands up and he throws his headphones off and goes, "Who the fuck is gonna catch me? Who's gonna catch me? I'm Jay-Z, and look what I'm doing now."
Yeah.
And the whole thing was, it didn't matter how much better he was than everybody, he was still hungry. And this is 10 years ago, 12 years ago now, right? In 2007, 2008, whatever. And Ryan Leslie says, that's when I realized Jay-Z's different.
Yeah.
Right? And so it's the same thing. He didn't write anything down. He could walk in and be out in 6 minutes. Like, it's crazy.
And by the way, he learned this skill and he de-glorifies it now as a responsible father and respected member of our community, of the U.S. American community. Mm-hmm. He's like, man, like I had a lot of spare time sitting on project benches selling drugs. Mm-hmm. And I actually did something with my time and I invested in myself. So all you out there listening, no matter what your social circumstances are, or who's listening to this podcast or what your demographic is, but we all share one thing in common. And it's you have a ticking heart, you have a thinking mind, use that to your advantage.
Facts.
It's like you and I wouldn't be here if we didn't use those to our advantage and take advantage of the resources that we could pull towards us. Of course. And then as we got further and further along, the resources grew and they become better. So anyway, let me finish this.
All right, Jay-Z.
You're gonna hate me, or a lot of your folks are gonna hate me for this, and it's not a personal preference, but I'm gonna go Eminem.
Oh, he's definitely up there. Yeah,
okay, good. So I personally,
he's top 10 all time.
I think he's the most talented rapper, lyricist of all time. No one has ever rapped like him.
Yeah.
Big L.
It's hard to refute. It would be hard to refute. He's not top 3 lyricist.
Yeah, so Eminem would tell you Big L is the best lyricist.
Yeah.
I would tend to agree with that based on my personal preference, but Eminem has a substantially longer discography, unfortunately, because Big L was murdered. Substantially longer discography at what was the peak and probably continues to be the peak of lyricism.
Dude, they made a movie about him.
Yeah, the purest form of rap, man. Yeah, and so and also that's beyond the point. That's me arguing from the perspective of a hip hop head. Mm-hmm. Don't forget what he did for rap music. He took rap music from my inner city ghetto project, drug dealing, gang banging area, and put it in every suburban home in the country and in the world. And
I remember when him and Dr. Dre came out, and he was like, "What did he say?" And he's in the basement, or I forget the lyrics, but I remember just listening to that over and over and over again.
So what do you say to somebody you hate? Anyone trying to make trouble your way? Yeah. So absolutely. So you got to tip your cap because of what he did for hip hop. He took hip hop from an urban art form to a international art form. Single-handedly almost.
All right. Jay-Z, Eminem, you're 2 for 2.
Lil Wayne, you gave all the background on Lil Wayne.
Yeah.
And this is something that pains me to say out loud because I am not a fan. I don't believe what he's done. I think he's part of the problem as it relates to what people in our generation have think about hip-hop. But, dude, you got to give it to Drake, man.
Oh, yeah.
The guy's been a legend for 10 years now, and people who are 14, 15 to 25, 26, they don't know who Jay-Z and Eminem are.
They have no clue.
They barely know Lil Wayne at the tail end of his once illustrious career.
Here's my thought on Drake. Drake's the perfect example of the science at work.
He is pure science.
Yeah,
which is wheelchair Jimmy.
Which he understands. Here's what works, so I'm going to go do what works. I'm not going to just do what I want to do.
No.
And he's definitely intelligent about doing that, which, by the way, makes him great.
Which makes him great. Oh, I love that. Thank you, brother.
Right? Like, people will definitely hate that you said Drake because, like, he's not a rapper.
I hate it. I get it. True.
But
if you hate it, you're a hater.
The haters are hating.
Yeah, absolutely.
All right, man. Listen, where can people find you on the internet?
All right, so yeah, obviously my Twitter. I'm at Hedgeye Dale, HEDGEYEDDALE. Just a lot of hot takes on finance.
Alphabet soup over there.
Well, I mean, I have a weird name, Darius Dale. So Hedgeye is obviously my firm, my brand. Rep that DIE. Yeah. So look, I'm a very accessible guy. I like to engage in the debate. I may not be the smartest guy in the room, but I'm definitely going to be one of the hardest guys in any room I walk into.
I gotta say, where did I see you? You were, with Julia on CNN.
Yeah.
And I saw you. And
Julia's great. She's really sharp.
And you were just dropping dime after dime. And I was like, yo, my man is at the New York Stock Exchange up on the catwalk, and he is lighting a fire up there.
From the hood to the stock exchange, man. Where are we at now? Where's next?
I love it. Yeah, White House. All right. So, all right. People can find you on Twitter. I appreciate you doing this. We definitely have to do it again.
Absolutely.
We might have to get. We got a couple other friends that might liven up the conversation even more.
Totally.
And next time we do it, though, there will definitely be Bud Light here. So I appreciate you coming in.
Of course, man. Thanks for having me. I appreciate you guys listening. Thank you.